Hello, and welcome to a short video of me stumbling on trying to explain why Bitcoin will never moon again. Sorry folks, but it's true. A pizza delivery guy hoping to grab the next moon and get rich that way? Sorry, won't happen. Let me explain. There are two important factors when considering the moon, and both of these help turn the moon correction into the moon bust. One is the whales, and the other is the bots. Let's start with the bots. Some people think there are good bots and bad bots, but that isn't the case. A bot is a bot and they all contribute to the moon bust. There are three main types of trading bots. Stop bots for stop and take profit and stop loss. Scalping bots for quick gains, and manipulation bots, bots that intentionally push the market up or down. Let us begin with the stop bots. Most exchanges now offer stop bots with a basic account, and they sound like a good idea on the surface. There's a stop loss bot. If the price of a commodity you own drops in price too much, then you can set it to automatically sell to cut your losses before they get worse. Then there is the stop take profit bot. When your investment goes up a certain amount, you have it sell to keep your profits before prices drop down again. This way you're able to walk away from the computer. Both of these sound great. So what is wrong with stop bots? Keep in mind, I'm not talking limit orders here. It's simple to explain why these stop us from hitting the moon. If you bear with me for a bit. First, the market does not move in a straight line like this. The market wiggles and jiggles and moves like this. So let's take a look at an example of your stop bots hurting you. Let's say you have your position here at 63.20 and you set a stop loss at 6,300 and or a stop profit at 63.40. In this example, your stop loss would have kicked in, causing you to drop from 63.20 value to the 6,300 value and being stuck with the loss. You would have auto-bailed before the upswing. Likewise, your stop profit would have bailed you out before a majority of the profit could have been made. So either one would have cut you short in some way. And as you look across the graph, you'll see a lot of areas where this situation is a valid argument. But wait, there's more. Suppose you have 100 coins, and they stand at a position of 640 each. You want to let them ride, but you don't want to take too big of a hit, so you set your stop loss for 600. Looks like a sure way to maintain your minimum, right? But let's look at what happens in the order book with a very simple example. Here we have 100 coins with a stop loss to sell if the price hits 600. Someone buys or sells at the 600 mark, and this triggers your stop loss bot to instantly sell. Your auto sell starts sending the price down by $10 in this example, but it's worse than that. Look at what you actually sold your coins for. 50 for $5.98, 10 for $5.97, 10 for $5.93, 30 for $5.91, and the math is simple from this instant selling showing. You sold for $58,990 instead of $60,000. Or if you want percentages, you sold for 1.68% less than you wanted to. And the news is even worse if you look at the order book again. In the first three positions on each side of the spread, there is an 11 coin sell push. But on a 60 coin buy push, indicating that the price would have quickly increased above your 600 stop loss spot and you missed the retracement. Let's look at another kind of bot, the scalping bot, and one method they used called fake inflate. Here we have a price position, and here we have a number of coins for sale in each position. The bot sees a weak wall on the sell side of 14 coins for 3 positions. It buys those coins and spoofs bids to keep the sell price up. It then resells those 14 coins at the new position. The price will remain at $94.95 as long as it keeps just one coin bid on the buy side. The bot spent $13.05 to buy those positions and sells them for $13.30. That's a 25 value or a profit of almost 2%. And any spare coins it picked up, it will resell down to the original position. With almost 2% profit, it can even sell them below 92 and keep some profits. You say, wait, it pushed the price up. How does this fight our climb to the moon? And the answer is easy. These 3 bids are a house of cards. For just 3 coins, the price of the coin will tumble 4%. And it will as soon as the bot stops trying to hold the buy wall at 94. But there's more. By raising the price to 95, the bot may have triggered a stop profit. For example, 100 coins. Remember that stop profit bot you thought was great? The price will tumble to 89 and the owner of the stop profit will take 5.5% below what they thought. The final type of bot we come to is the manipulation bot. I hope I spelled this right. We look back at the same order book and how a bot can intentionally deflate the price. The bot sees that for 36 coins it can lower the price below 90. 90 is a psychological barrier because most people set their stop losses at numbers ending in 0 or 5. By buying these 36 coins, the bot can trigger any stop losses in place, causing an immediate sale, which the bot hopes will trigger a FUD effect among the active traders. The bot can then buy the full amount it wants to buy at a much lower price. You ask, but how do they make a profit that way? And the answer is they want the coins, not the dollars. The coins give them price control. To explain this, we bring you to the next major factor. The whales. No, let's make this anatomically correct. The evil whales. Whales are individuals or organizations that have large amounts of cryptocurrency. And we mean huge. If you have less than 100 Bitcoin at the time of this video, then you're among a majority of crypto holders. You may look at the pie display and say, wait, the whales have a small slice, so let's put this in a way that better explains it. This is how many people hold Bitcoin. If you hold less than 100 Bitcoin, then you're among 22 million other people on the left side with very little price influence by yourself. But look at the last column on the right. The amount of influence owned by the top 120 holders in these last 2 columns is astounding. They can moon or crash the market at will. You are a tiny Tim in this market. And the whales don't look like this. The whales just own bots. They look like this, conducting millions of trades a minute in such numbers that indicators, RSI, volume, boiler bands, and momentum and all this stuff doesn't matter to them. For us to reach the moon, their bots would have to buy and hold crypto, and there is no profit in it for them when they can sell the same massive coins over and over for a much faster profit. And they make in a day what you'd struggle to trade in 10 years. And we don't even come close to covering all of their bot techniques, such as shorts building, order book fencing, mushrooming, and so on. So sorry folks, you're not going to go to the moon.